Scott, I want to thank you for taking a few minutes this morning to educate me, our clients, and maybe some prospective clients on you and your firm and all the great things you're doing at Sealy and Company. Scott, maybe just let's kind of kick it off with maybe just telling us a little bit about you and your background, and then we can kind of get into specifics with the firm in a minute.
Okay, well, I graduated from SMU and years ago with a real estate degree and joined our firm. Back then I think I was the fifth employee there. And my dad was a real estate broker and a capital syndicator, and he also was a MAI appraiser. And what he realized over his years of appraising that industrial properties, relatively speaking, were a great investment. And so he ended up realizing that 25, 35 years later, a warehouse with good bones was leasing per year for about what it cost to build per square foot that 30 years earlier. So I came back from SMU, joined the firm, and then in 1970, we started to acquire industrial assets in Dallas, Houston, San Antonio, and Atlanta primarily. And we bought those assets with some family offices. We didn't call them family offices at the time, they were just families. And some of those investors are still our investment partners today. Their kids and grandkids are. So that was how we got started in it. I was responsible for underwriting and acquisitions, and I was a one-trick pony and basically did most of that. And then we had this property management team. So we've been able to grow this effort over time into a team of about 130 people, and we have all the disciplines developed so that you can make money out of the warehouses and create a higher than expected return in the typical marketplace, because it's not what you buy it for and sell it for. It's really all the little parts of it, and your positioning, your acquisitions, your financing, all of those things to get to a better return. So it's been an evolution. Our operating company, I think, is best in class, and we use that in all of our experience to buy generic warehouses. But my background was basically a real estate degree, and then came back in the school of hard knocks of just doing it time over time and establishing wonderful relationships in all these different markets to be able to find deals, particularly off-market transactions.
Well, I was going to ask you a little bit about that. That's one of the things I've familiar with is that one of the reasons you've excelled is so many are off-market and do very few brokered transactions. And I was going to ask you maybe to comment on how you built out that network and how that had been working.
Well, when we first started, basically, I looked at what the best practices of the various real estate brokers were and the different banks and other people that are part of the stakeholders and market makers in the industry. And I was trying to take that best and brightest parts of things and bring them back to our company. So it really was a long period of time developing practices and positioning assets and developing great reporting for property management, those kind of things. It was a 40-year process, really, and I think that is part of what makes us a little bit unique in what we do. In these relationships, we've got brokerage relationships that have gone on 25, 35, 40 years, and we've been through a lot of cycles in these properties and in these markets. So we rely on those. We do our part of the work and rely on the broker to find the deal, and then we are very market wise in our understanding of the market. So the deals we're looking for and the stories that they have behind the deals typically we can underwrite them and get them acquired, and everybody ends up with the broker ends up with his commission and he's happy. So we're reliable. We've had a lot of tenure there and we have a history of success. So that really is what's been the secret to growing our business to where it is today.
Speaking of history, so how many generations now have worked in Sealy?
Well, my grandfather started the business in 1946 with my father, when he came back from World War II. So my grandfather, my father, myself, and now some of our next generation children have been in our business. So my dad was part of the business until 96, and then he passed away, and I've kind of carried it on. As my younger brother says, really, Scott, you're just the head cheerleader. But I like doing that. I like creating new strategies and figuring out where the market's going and trying to lead the company through the market. And there are a number of people there that help me do that. So it's not just me, it's a great team.
One of the things we look for when we identify alternative managers and investments for our clients is alignment of interests. And I know that you all invest your capital right alongside in the same deals that we're involved in. And so, if nothing else, we know, you're putting your best foot forward in those transactions.
Right. We think it's important to be a good partner, just like we look for good partners in our efforts to make investments. And so we put our money in first. We've tried, I think, more importantly than a sponsor having money in it, we try to design the partnerships and the documentation so that there's always an alignment of interest between the sponsor and the partner. But we put significant capital into our deals. Years ago, we didn't have the capital to put into deals, and over time, we've just gradually been able to afford more capital in our investments. But it's important for a sponsor to understand what's important to the investor, and then try to design the investment strategy around that, and to be sure that the partner that's making the investment is aware, but also very interested in the strategy you have. Some people want to make an investment, but you need to be sure that the strategy that's being presented is fits your nature, so to speak, in your investment strategies.
Another thing that we've really appreciated, especially in a world where everybody's got a real estate deal, right? There's no shortage of people that are raising some capital to do a real estate deal. That you all have really committed to institutionalizing your process, your distribution, your documentation, your reporting, to really have that nailed down, sure makes our life a whole lot easier.
That's right. 40 or 50 years in the making, you can finally get it down right and running pretty smooth. Our efforts in trying to create the right documentation and create the right, let's call it story behind the investment strategy. That's most important. What I found was we didn't really know when we started this part what our history was. We didn't know how many deals we'd put together, what our returns were, and all those things. So what was great was it's 8 or 10 years ago when we started this effort, is we went back and studied our own history and realized what we'd accomplished, and we looked, kind of behind the curtain as what was the most effective thing we did and why were we successful. And so that's led us to today, is to better understand ourselves in the market.
Another characteristic that we like is, a lot of real estate funds, the capital is called over a longer period of time, which nothing wrong with that, but we do love the way the structure is set up so that your assets, once you've made that commitment, are fully deployed almost immediately, which helps us when we, if you think about how we build out portfolios and are tasked with generating returns, once we've identified a great strategy, we love to go ahead and get that deployed as rapidly as possible.
Well, that's right. When we run our pro formas, we're saying we like to have the capital invested within 60 days. Typically, it's 10 to 20 days. So it's a strategy where you're using all those relationships around the country to always have a healthy pipeline, so that as the capital comes in, you can deploy it into the best deals that you've been able to find in the market. So the way we're doing it and having capital come in and get it deployed into great assets and a lot of diversification in those assets, it's worked very well.
Right. Is there anything you may have new on the horizon that you're thinking of, not necessarily from an investment perspective, but anything that you of interest that you may have on the horizon for Sealy?
Well, I think Sealy's going to continue to do these investment partnerships, and we've got a real talent that we've put together, and we've got a great operating company and a team that's been able to find these investments and make them successful. So we'll likely continue doing what we've been doing. Sometimes there's a little nuance from one fund to another, but currently what we're doing works great. So we're going to keep doing that. If you find your groove and you're doing a good job in it, if somebody always comes by with a better idea that they want you to try or do, I don't think we're going to do too much new. It might open another avenue for good equity investment, but currently we like what we're doing, and we'll stick to what that is. It works.
I want to thank you again for taking some time today, and just want to say we've been really impressed with the people you've surrounded yourself with, the team that we work with. We value that relationship and look forward to having it grow in the future. I hope you'll join us again, maybe for an update at some time later in the year or maybe next year.
Happy to do it. Enjoyed visiting with you.
Thanks, Scott.